Good evening, everyone, and thank you very much for joining us tonight. Now, we've got a fair bit of ground to cover. We're going to have a fairly informal session, open for questions and feedback and discussion. Please ignore the slide I've got up. It's not really what we're going to be covering tonight. I really just wanted to get in there and do a bit of an intro on myself. I'm just having a look to see if I've been joined by my partner in crime here, Ivan Cherry Love, and he has not turned up yet, which is fine. But I'll introduce Ivan and I'll do our disclaimers and then we'll run through what we're covering tonight. Now, I apologise, my headphones have just given out on me, so I'm talking directly to the screen and I'm sitting in my office on an antique chair that's very squeaky. So if you hear some squeaking in the background, that is my very old chair that I am sitting on at the moment in my home office. So thanks for joining us. Interesting market, a lot going on. Big day for us today. And tonight's session, we're going to have a look at what's going on in the market. The market has technically, it has met, it has broken out. So it has broken the resistance level. I don't know whether it's broken out is the right thing. It is, but there's a few things that we need to consider in terms of what we're looking at in the current market, and there is a couple of different trade ideas that both Ivan and I are looking at for our personal accounts, so we'll share that as well. So thought we are at a pivot point, a major pivot point. So how do you trade pivot points? Well, if you're confident of the break, we have the strategy, and I'll run through that tonight and show you the rules. And then I'll show you a couple of strategies that we've been using to be able to trade it as well. And then so we can go through that and be interested to see what everyone else is up to. My name's Patrick Nelson, and the MD and founder of Reach Markets. My background is as an options trader, so personally trading in a professional sense as well. The education partner to the stock exchange. And Reach Markets has a division called Reach Trading, which Tradefloor and Ivan as the co-founder and managing director, we run that together. Tradefloor building the technology and Reach Markets providing the service, support, the education and many other facets of how we deliver the service together. And Ivan's background is as a trader. He started trading when he was 14. By the time he was 19, he was a full-time trader. If you ever talk to him one-on-one, he'll tell you his tale, but incredibly successful as a young guy. He's a very, very smart guy. The team at Tradefloor, very, very smart and have got some very specific knowledge in this particular area, which is very, very valuable. So the implied volatility platform, which we'll show you tonight, is the trading platform. And for those of that are new, if you would like to, at any point in time, get a trial of that system, get access to our education, free education, have access to our trade ideas for a period of time on a trial, or any of those things, you can just type in yes into your chat box and we'll give you access to that. So at any point in time, if you want to get a free trial to any of our stuff, type it in. From our perspective, we set up Reach Trading at our division because we're both passionate about options trading, and we felt like there was sort of gaps in the market. One is that, you can get a full service broker to assist you, but they're not always qualified to assist you. Or you can get online and trade through ComSec or E-Trade or whatever it might be, but the technology hasn't really been developed for options traders, at least not in the last couple of decades. So we really wanted to get in there, build technology for traders, built by options traders, but also provide the services and the support to help you unlock the ability behind that. And, we also do things like hire quant analysts to go and test things that we're working on and doing, make sure that the strategies that we're talking about and our hypotheses for how we pick direction all add up. And then we build tools around scanning the market to identify options trade ideas for you. So anyway, that's enough of the preamble, sort of general chat about who we are and how we go about things. We're passionate about this space. And tonight we'd like to just talk through some of the things that we're seeing in the market, some trade ideas, and I guess if you could leave this session with a better appreciation for what's possible, then that's fantastic. If you learn something you can use in the market, then we've done our job and we'd be very, very happy with that as the outcome. Now, I understand that some of you coming into the session tonight might be hearing about options for the first time, and there might be things that we talk about where you get a little bit lost when we're talking through. I would encourage you to just put to a side that there are things that you don't understand and focus on what's possible when trading options. All of the detail and the education that you need, we've built online courses and we can provide all of this stuff to you for free, right? So just, type in yes or education or something like that as we go, and we'll make sure that we get you all that free education and everything that you need to get you up and running, all right? Now, so anyway, there's Ivan and myself. Let me flick across and say any of tonight's presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. All right, so I might like to get straight on to having a look at the market. Hello, Ivan.
I'm glad you can hear me now.
Yeah, I'm glad as well. So I thought we'd start the session tonight by just going and having a look at the XJO and making some comments on things that have happened recently. I'm not sure. There are lots of different ways of looking at the market, right? And we've got different rules that we use at different points in time for how we trade. But, what probably has been most significant in recent times is we've actually broken that 52-week high, and we've also broken through to all-time highs. I guess in terms of looking at a chart and considering what's going on, go away line, probably what we look at, and when we're really important key level for us with a lot of the trades that we do is looking for a break of a 52-week high. And so we've seen that this week, and we've also seen, in fact, we saw that on Friday, and then we've seen that again today, right? So I'll run through for you some of the rules that we would look at specifically for a breakout trade. So with the breakouts, this is a strategy that we follow very, very carefully, and we've done a lot of back testing on. We've had quant analysts look at in a lot of detail, and there are a lot of stats behind this particular strategy around how it's performed in the past, and we're happy to provide anyone that wants to have a look at that. And we're also happy to give you access to our platform and our scanning for a period of time so you can have a play around with it. And there's a back testing section. You can go and test these things for yourself. But for a breakout, what are we looking for? Breakout trade is the first question we're asking ourselves, is the market above a major resistance level, i.e. is it above the 52-week high, right? And in this instance, in the XJO at the moment, the answer is yes, and I'll go back and we'll look at the XJO. Is the 50-day moving average above the 200-day moving average? All right, so that crossover of a 52-week average. So I'll put an arrow here on the chart which shows where the 52-week break happened back in time here. And at the same time, we can see that the shorter-term moving average had crossed over the longer-term moving average. That's what we refer to as a golden cross. And that golden cross is also an indicator that the overall trend now is moving to bullish, right? So we want to see that has occurred. It doesn't have to have occurred at that point in time, but we just want to know that the golden cross has occurred and the overall trend is up. We then want to know that the 52-week average, the share price is above the 50-day moving average. So we want to see that the share price is above this line here. Is the 50-day moving average trending up? So we want to know that 50-day moving average is trending up. And then is the ADX above 20, right? And the ADX is an indicator to us to say, is the trend present, right? Is there strength in this trend? Is this a real move, right? And we want to know that it's at least above 20 to have the confidence that all our rules line up. So if all of those rules line up, then we go bullish, right? And the strategy that we enter into is an at-the-money bull put, and I'll go and I'll show you an example of an at-the-money bull put in one moment, but they are the rules. There are rules for a breakout. So if we go and have a look at what's going on in the market, and why I thought this session tonight would be relevant is that if I look at the 1 year chart, today, I'll close this off. Today the market is trading above the 52-week moving average, so you can see that that occurred on Friday. So that breakout occurred. So that's a tick. Yes, it is trading above. Some time ago, the 50-day moving average crossed over and has stayed above the 200-day moving average. So we've been in an uptrend throughout this period, and that continues. The share price is, I'm going to stop pressing this. The share price is above the 50-day moving average, and the 50-day moving average is trending up, right? So it ticks all those boxes. The final check is the ADX, and the ADX is ticked up today, but this morning it was at about 16. I think it might be at about 17 or 18 now, but it is still below 20. So I guess there is that weakness in the overall strength of the move at the moment that we would be concerned about, right? So it doesn't meet all our rules to do the trade, and we're rule-based traders. If it met all the rules, we'd be piling in, right? So we'll be waiting for some strength in the ADX at the moment, and at the moment probably just sitting there waiting for that to occur. I know for the people that trade these shorter-term moves, that looking at, there's a bit of some resistance. An upward trend line that I've drawn up here would be something that a lot of those trend traders would be looking at the moment, and they've been trading off those lines with some success. So you're at a level at the moment where for those people they'd be looking at it, but that's probably something separate to what we'd be looking at. Ivan, would you add anything more to that?
No, I'm battling technology at the moment while you're doing that, but yeah, half my stuff is working.
That's okay.
I think the interesting thing about these. Sorry, I was just going to say just quickly one thing. I didn't say no to adding something, but the interesting thing I think about this time, I think that that ADX pointing upwards and starting to move higher, but not there yet, while the market is breaking 52-week highs, I think in itself brings interesting opportunities. So I think that that's something that we probably should talk a little bit more about. We're obviously just below 7,000 at the top of a channel. I think that the real question is, will we continue here, right?
Yeah. It's interesting when we get to a pivot point, and a really key one like this. There's one thing that we're the most confident about, and that is even if it does meet all the rules, even if ADX was at 25 at the moment, the thing that we would be the most confident about would be that there will be a move of some sort, right? So whether that move, and the odds are statistically that it would be a bullish move, right? So we can go back and show the data at this. If all these things line up statistically, the odds are that the move would be up, right? So we know that the odds are in our favour. But at the moment, but if that doesn't move in our favour, we don't expect it to sort of flatline. We expect it to move down, and to down fairly significantly, right? So we're not expecting it to drift sideways from these key major levels. So that does introduce, with the ADX not being where we want it to be, which is holding us back from doing trades, it does introduce some other strategies that you could look at and trade, and we have been, right? So we have been using a few strategies with some good effect. One that's been lining up, and I think we spoke about it last Thursday in our trade group discussion, was a long straddle. right? So a long straddle is a trade which I'm making a decision. What I believe to happen when I enter into a long straddle is I believe that I'm not predicting which way the market will move. What I'm predicting is that there will be a move up or there will be a move down, right? And effectively I'm buying a call and a put at the money, and you can fiddle around with the strikes and so forth, but pretty much you're buying it at the money, call and a put, and expecting that there will be a significant move in one direction. The other thing that you'll be looking for that will greatly benefit the trade is a move in volatility, right? And volatility is at a level, you can see on our chart down here, the implied volatility level on XJO is getting towards the bottom of its range. And so when we get into a long straddle, we're saying, yes, I believe there will be a move. So I'd be happy with a move, maybe up to, 7,000, and 50, something like that, maybe 7,080, so 100 points up, 100 points down, that kind of range, starting getting to the range where we can make money. But what will really benefit the trade will be if volatility takes off and goes straight, say, from 10 to 12 or 13. The volatility will have the most significant impact on that particular strategy. All right. So if I want to put that strategy together, I'd go back to the strategy builder. When I'm looking at my strategy builder, I'll be looking at the one thing I always go straight through is to have a look at volatility. It's showing me over a year. If I want to have a look at, you get a little bit more granular, I can see that, we're sitting up. In more recent times, volatility has been at the lower levels that has been to, and then has recovered or has reverted back to more normalized levels. It's coming back off, and I've been waiting for it to get down to, 10, closer to 10, and then that really prices everything up very well for us, right? So if I wanted to do a long straddle, and so when I'm on this page here, I've got a fair bit of information available to me. I've got a payoff diagram. So first thing, if I wanted to do a strategy like a long straddle, I simply go to the cookbook, options cookbook, which is where we cook up our options trades, and I type in straddle, and I'm just going to go back here, and I would go out to the 20th of Feb, would be what I would be wanting to price up at, and create strategy. All right. All right. So when I do this particular trade, I'm looking at, so we look to understand the payoff on the trade, you go and have a look at the payoff diagram, and what that tells me is what its value is, on expiry day if the share price does absolutely nothing, and I can run my mouse over here and see how much money I'm making if a move occurs, right? And that gives you a feel for how you want to plot out your trade. Now, if I was when I trade a long straddle, I'm really trading against the clock. I never intend when I go into the trade to be in the trade on expiry day, right? So I'm saying, you know what? I'm at a point at time at the market. I'm looking at a chart, looking at, okay, what's going to happen? I'm expecting that either we're going to break this level, we're going to go up from here, or it's going to go down. And I'm expecting that move to happen, after some consolidation up at this level. I'm expecting that it will happen I'm trying to predict that it will happen in the next 5 days, but I'm giving myself maybe 7 or 8 days for that to occur. So I'm looking for these types of levels here where it consolidates a bit, vol comes off, I get in, and it pulls off, and off we go. Or on the flip side, it goes for a strong run up, and I can take benefit of that as well, right? So these particular trade, you've got time, but what will happen is when you're sitting in the trade, you've got some time decay occurring. So I'd be saying, I want to be out of this trade. I would want to be out of this trade, say, by the 24th. So if I was in there and it was absolutely bang on in the middle, 24th was probably going to cost me about $800 in this instance if I'm risking 3,700. Volatility could be a little bit lower and it could be a bit worse than that, but probably about $800, something like that. So when I go into the trade, I'm setting myself up knowing that, I've got the potential. I'm not trading all the way through to expiry. I'm risking, if I'm putting in the capital of 3,700, I'm risking, $800 or $900 for the period of time I'm prepared to stay in the trade for my move to occur, right? So on that basis, I'm quite happy to go in and put a quantity of, 5,000 or even up to say 7,000, knowing that, okay, well, I'm prepared to risk $1,500 to stay in the trade until say the 24th of this month, on the expectation that the move will have happened before then, right? If I get a move quickly, then I can, then it can come in quickly. So if a 50-point move could make me $600, or and so forth, or 100 points or 120 points, whatever it might be, I can do very well out of it. But probably more importantly, what impact can volatility have? So an increase in volatility really can have a significant impact on the trade. So you can see that, if the share price goes up, volatility goes up, or share price goes down, volatilities, that these numbers are significantly higher than the payoffs where volatility stays the same. All right, so it's something that you can really play around with in terms of understanding the payoff on that particular type of trade. Right, so that is one type of strategy that when we're sitting at a pivot point like we're sitting at the moment, I don't have enough confirmation as far as a directional move on the up, then I can start using these types of strategies. It's one that I'll be looking at tomorrow, and we'll be running a trade group session on Thursday live in the market at midday. So if you'd like to get access to the trade group session and have a little trial there, just type in yes into the chat box and we'll give you access to that trade group. You can come along and have a look at what trades we're looking at. We run those sessions every Thursday, and for those of you the people that use our platform, absolutely, they've got access to those. Yeah, so just type in yes if you would like to get access to that as well. We were talking about the breakout trade, and one of the tools that we've built is the scanning technology, and that will show us if there is a breakout trade coming up. And at the moment, I think, I might just change that to...
We've got something going on with the colors there. The answer is actually a lit long, an active lit long.
Yeah. Okay, so yeah, okay, there is so that at the moment you can see that we do have an issue with our color scheme at the moment. Usually what happens is, if you can see where I've got my mouse over Ansel, it's a lit long, so this is a trade, and it's showing that...
We've introduced the dark theme, so things are going.
Ivan, you talking?
Sorry, I was just saying, we've just introduced a dark theme, so as a result, some of our colours have disappeared, so we get that fixed up tomorrow. Yeah.
All right. Let me go to dark theme and see if it might work.
It's probably not quite going to work, but hey, while you're doing that, I think that maybe just before we do jump into that, I just want to quickly touch on something. So you were talking about a little bit about a straddle. I think that there's one strategy that some people on the line might be interested in, which is really modifying it just a little bit. So if we're looking at, maybe if we just stay on that chart for a second, and
yep.
The big thing here is that, I mean, ultimately, if you do have a bit of a view, which is, okay, so we don't really know where the market's going to go up or down. It's at a sort of at a pivot point, which is in itself a good place to be when you're trading options. And you might be of the opinion that being at the top of the range, you might think the channel is going to continue and that the market's going to go back to around about 67.50, or at least close to that 50-day moving average. And you get two big benefits, or I guess the third dimension that people can trade with options is that the market goes back, and if it does go back, volatility you would expect would spike somewhere into that 13 to 15% range, unless it comes off really quickly, in which case you could be talking about 17 to 20. Now, I guess the market is relatively fragile, so this is sort of a trade that I think is worthwhile looking at. So the modification is from a straddle to a strip, and what that is instead of buying one put and one call, you're actually buying two puts. So you get double the benefit of volatility drop, and you get to participate if the market goes up. You generally need the market to go up a lot to, I guess, make money on the call side and outstrip the two puts that you're buying. But because volatility is still relatively cheap, if you're looking at a March, what did you price your straddle at? It was about $3,000 per one lot.
Oh, per contract?
Per contract, yeah.
No, it was more like 1,600.
1,600, yeah. So strip at the moment, and you can also tuck that in, it's one of the strategies we've got, 3,800, but again, you're effectively getting a massive benefit of, so that's right, so you did 4 lots. So effectively, instead of doing 4 contracts of each, you'd actually be doing 2 lots of the, in a similar environment, you'd be doing 2 calls and 4 puts. Yep, so that's a strategy. I think that if you're
I'm just going to go, to give me one moment.
Yeah.
So just go slow on this. So when you're looking at the strategy builder, if you haven't used this technology before, the explanation of the trade on the screen there shows you a payoff diagram, and it will show you what's included. So it's saying buy 1 at the money call, buy 2 at the money put. So if you're looking at long strip, which is the top right-hand corner of the options cookbook screen there, saying buy 1 at the money call, buy 2 at the money puts, and then it shows you a payoff diagram of it, and it's indicating that it's bearish, it improves with volatility going up, and it's got time decay, right? So all that information's there on that trade. So I click on that, and it's saying 20th of Feb. Ivan, you'd be happy with 37 days to expiry?
I'd actually go March, but my drop dead date would be about 15th to 20th of Feb. I wouldn't hold it past the 20th of Feb, so you're just not getting killed on the time decay so much.
Okay, so that's interesting. So you're in there for a bit. Okay, got it. So
yeah,
create strategy, and you can see now what has occurred. And I'll just pulling this up. So we're looking at a payoff diagram. Right.
So your break-evens become 380 points to the upside and 200 points to the downside. But the reality is that if you're holding till expiry, in reality, what you expect is you expect a move to happen. You expect a move to happen relatively quickly. A 100-point move lower will make you money straight away. So if it happens quickly, you're talking about sort of $600 on a risk of probably around about $300. And so that literally, so if you maybe hover over the 68.27 level, I'll probably show you the 2 levels I'm looking at. So we get a move in 2 weeks and the market drops 100 points, or less than 100 points. It's really 80 points from where it's at. So just, I guess, one thing to clarify, the reason why it's looking like it's a lot more, the March expiry 6,900 is based on dividends coming out between now and March, and there's a batch of dividends coming out. So when we're talking about the strike, we're actually talking about from here, sort of 120 points going down, and the futures will be priced off significantly lower. So when we're talking about the 68.27, the 2 days. So I said sort of Feb 20th roughly, when we're talking about getting out, you're going to lose $264 if it takes that long to get there, which isn't. I mean, it's not a big move, but if it happens quickly, you're up $600. So that's sort of the theory behind what I'm saying. And then if you're getting to Feb 20th and the market hasn't really moved more than 100 points each way, that's when you'd probably be taking your losses and cutting that. You definitely wouldn't be holding it past that. And then if you get a much bigger swing and sooner, then you really get the benefit of the volatility, and that's really what it's about. So if you go to the grid, then you'll see how much volatility really skews this opportunity, and that's what's going to happen. So the market, if it drops, your vol's going to go up 20 to 50% minimum, goes down to 68, 27, and you'll probably make about $2,000 on a $300-400 risk ultimately. So time decay not your friend, but if vol pops and it goes down, which with where we're at, as with that pivot point there, effectively thinking that it may be a fake out at this point in time, it's a strategy that I think is worthwhile implementing.
All right. So
you need to approve my trade, by the way, Patrick.
So you're bearish, Ivan? Is that what you're telling me?
No. So look, I'm not. I'm bullish on volatility. I guess that's probably the way to put it. I think that there's just so much stuff. It's a low volume period. Volume's just going to start coming back at sort of this week, towards the end of the week, early next week. I think that we're at the top of the range. I think there's more likelihood of the market falling off. But, the things I'm looking at is, IVHV at 66, right there on the XJ stats in the fourth line, right below the 52-week high. That's showing that IV is literally, it's almost half the price of historical volatility of the last, 30 days ultimately. So we're in a situation where, volatility is really cheap. It's consistently been underpriced on an IV basis over HV over the past year. We can actually bring that up as an indicator. IV ranks pretty low. I just think we're going to get a pop in volatility, or at least that I think that it's more likely that volatility is going to pop as opposed to trying to pick a directional trade. I think that, I guess the easiest thing to do is just buy a put. But then if it really takes out some stops above here, goes above 7,000 and starts moving higher, you minimize your losses on that long call. And I think that's your hedge. And if you really want to get smart about it, there's probably, a 70-50, 7,100 call that you might sell, reduce the amount of premium you've got. Maybe look at a 6,600. Sell a couple of puts there, minimize it, turn it into sort of a reverse iron condor type trade. There's things you can do, but I think that as a pure strategy with where the market's at, trading a pivot, I think that as long as the market doesn't do anything stupid tonight, that's a trade that I'll be looking at tomorrow.
Okay. All right. So fair enough. So I get where you're coming from there. I'm probably on the more on the long straddle side. I think I don't mind the setup at 69.50 that we've got here, and I'll tell you why. So if you just focus on the payoff diagram, you'll see that it accelerates a little bit quicker on the upside, and I don't mind that because I want to enter in, and the challenge for me, it will be getting set at the right level of volatility as opposed to the price.
Yeah.
But if we get a inside day tomorrow, or it's sort of, as long as it doesn't break and run really hard, I think you'll see vols come off a little bit more, and then I'll just get in. And then I don't mind setting it up in a way that it needs a smaller move on the upside to make a profit. But on the move on the downside, I am expecting volatility to pop. And so on the share price move, but probably the more exciting part of the trade will be the volatility move. And so I'm being a little bit more cautious, or a little bit more agnostic to the market than you are. Whereas you've got a bit more of a bearish bent on that trade. But if the market moves down, and I do feel like that's probably slightly odds are in that favour, but I don't have enough data to form a view. Is probably my issue at the moment. That none of the trade systems sort of that we work off line up and give me the information that I need for a directional play just on that. There are some stocks lining up now. Just quickly, Ivan, give me just a couple of minutes to run through.
Yeah, and hey, just one thing while you're going into that trading scans page, because that's something that I just want to make a point about. I guess the reason why I'm a little bit more bearish is that so this is the scenario that usually you get. You go into trading scans, and the market's at a 52-week high, and we've obviously seen a lot of this over, even since we've built the screen. The lit longs light up like a Christmas tree, right? You're getting greens everywhere. But you look where the green dots are compared to the 52-week ranges. There's 3 stocks, and CTX being at a 52-week high because it was at a takeover. Right? Everything else is it's not even approaching. So the entire 52-week high on next show is also smaller cap stocks. It's outside of the top 75, which is, to me, is a pretty weak sign. So I think that the risk is a little bit asymmetric, I guess. And I think that if the market stops getting that support in the lower cap and when volume returns, I mean, either you get a big boost out of the big stocks, you get that push higher. We're trading at 700, so 700, 7100, 7200 mid Feb or earlier. But if you don't, and the volume starts trying to find value again, then suddenly the entire support's gone. So I think that's the problem that I'm seeing.
Yeah, no, I agree with you, and I think we've seen it before where you have these run-ups, you break the new highs, but it's being supported by the small caps, we've seen some snapbacks in those scenarios. And the other thing is that when you see a breakout, you do want to see that the big caps are with you, because otherwise you're really going to grind up, because they've all got to break their resistance levels, and there's a lot that can go wrong breaking through. So we're only bullish after we see the breakthrough. Before that, the most likely scenario is it will revert back to somewhere like at the previous support level. So there's a lot of that stuff going on that doesn't give you a stronger lead, and I guess it's supported by our ADX and so forth that we're looking at the moment. Yeah. Now, for people that if you don't use our technology, the scanning tool, and I mention this because we've just updated to the system today to allow you to look at it in white and black, and it's played. I played with the colours that we have in our trading scans. So normally when you run our trading scans each day, you'll see that if it says here lit long where my mouse is hovering over, that would be green, right? So that lit long trade is a trade that it comes up through our analysis, and I talked you through some of the rules around a breakout, which is a lit long trade. And if you click on that, it actually pre-populates the strategy, and it'll show you, okay, and I'll just go on to add. Right. So it's saying on this particular strategy, it gives me the options strategy, so I can see the 2 legs of the trade, and it shows me my maximum profit on this trade is $1,300 and my maximum loss is 670, right? And I can then go up and look at the payoff diagram and see, well, what happens with the share price for me to make money out of this trade, and and so forth. And you got to understand, with this particular trade, when we see a breakout trade, we're not going for a 20% profit. We're actually going for the max profit. So the risk at $670 on this trade, max profit at $1,300, it's a pretty attractive payoff. And we're not going to be in the trade for, as I said, 20 or 30% profit. We'll be wanting to get the max profit, or very close to the max profit. What happens with people when they trade options, or they just trade full stop, they'll have lots of small profits and then one big whopping loss. We want the big profits, right? And we set up our trades, and they're back tested on the basis that we're going with moves. And so with the breakout trades, and why we're passionate about looking at breakout trades, is we're not looking at it going from the support to resistance levels of the trading range that's occurred over the previous 30 days. We're looking at a significant move on the upside, or if it goes against us, we have a strategy. We've built into our strategy a switch. So there's a point which identifies, okay, you know what, this is no longer a long trade, switch it to bearish position if it's a bearish trade that we're looking at. So if you want to get access to our scans, trade ideas, just type in yes, and we'll organise to give you a free trial so you can get in there and test it. And there's education that's been built into it as well, so there's a full library of education, so you can go in there and have a look at this. So just type in yes if you don't have access to this already, and we'll get you set up with that. All right.
Almost a good time for my shameless 10 by 10 plug.
Yeah, if you must.
You just don't like selling it. Yeah, when you sign up, if you want to go and get the 10 by 10 education, it's not part of you signing up to implied volatility. But if you do want to set it up, type in yes. It's a free 10-day, 10-minute video course that you get, starting from sort of the really basics to the more advanced. So type in 10 by 10, just so that, or 10 or something, just so I guess not yes. Thank you, Tim. So that will give you access to those daily 10-minute videos, which will take you from basic to more advanced.
Yep. And that education is, there is a lot of education that's been built in, but that's a really good program. So I always give Ivan a hard time when he flogs his 10 by 10, but it's actually a really good little education series on
have you seen all of it?
Technology. No, I only watched the first minute. No.
Yes. Oh no, of course you did. Of course you did. Yeah.
But no, it's really good. It's a really good way of getting up and running with the platform really quickly. So if it's something you're interested in, type that in. All right, but otherwise, we'll keep going. David's make the comment that he always likes to put Bollinger Bands on a chart to allow me to better judge whether a move up is likely to continue in the short term. Yeah, I'm not a big Bollinger Band man, but yeah, I do know. I did always have. I used to have it on my charts. I've gone away from it. Ivan, do you use Bollingers?
No, but you know what? Well, yeah, you do. But you know what I was interested in actually is I've seen a modification. So the big thing I don't like about Bollingers is its historical volatility typically. But the thing that I like, because it's effectively standard deviations, what you get from an applied volatility chart and IV rank and all that kind of stuff. But I think the interesting thing that I like, I saw a modification of Bollinger Bands that uses implied volatility as the input, and I want to see, I want to plug that in and see whether we can do that, and if we can, seeing if there's some edge out of doing that. I've heard some good things out of the guys in the US that have set it up, and yeah, I'd be interested to see if it works in our market.
Yeah, good. The chart that we're looking at here is CSL, and Trudy has asked us, as she quite often does, to have a look at CSL because it has been in it's met all the rules for a lit long for a long period of time as a stock that's valued at $300 will. So if we go back just over the last 12 months, we can see what's happened. So it's constantly been presenting itself with ideas and lit long ideas, it broke a new high. I think, what was that? That must have been last Thursday, Trudy. I think that
we were talking about it, a trade session, yeah.
So
where I did my typical kind of CSL too expensive. So you just, if it goes wrong, you end up owning a lot of stock.
Yes, yeah, it is very expensive, big position. But anyway, you don't have to do a lot of contracts.
Yeah.
But anyway, Trudy, you wanted us to have a look at it, and
so the 300 sold, 290 bought.
Yeah. Yeah.
So 300 sold strike. So I think it's probably better to look at that tomorrow in the trade group. To be fair, because it's obviously and more importantly, just because we'll get a bit more confirmation tomorrow. I mean, to be fair, Jesus, it's not a bad long. You still be roughly at the money, I guess, a bit higher than break even. So the time decay is still in your favour, but probably too early to make a call on anything. Kind of got to wait these things out. Yeah.
Yeah. Yep. All right. Is there any other questions? Is there any questions that anyone would like us to go through? Now, I do want to say that I know that I can see a lot of familiar names and experienced options traders on the session tonight. If you're not someone that's got a lot of experience, type in 10 and we'll get your 10 by 10 series, and we'll get you set up with the education stuff as well. Otherwise, to get access to the platform so you can paper trade, if you haven't already have got access to it, we set you up with 50K paper money so you can practice trade in the live market, and you can go and you can back test. We have our trading systems, our trading rules. If you want to test whether it works, you can go into back testing, and you can go and simulate any trade from any period of time since 2015 where the volatility data started to get stored. It's 2015, that allows you, to go and get accurate pricing on all different option strategies. So you can have a play around with that, and you can also test our hypothesis that we've tested in so much detail. We've done a lot of work around breakout trades, iron condors, and we're doing more and more work around some of the other strategies that we use. But all right, so Martin is on the AS. Oh, Martin, sorry. Is the XVI or the VIX on the? I imagine it's the VIX you're referring to, not the on the ASX implied volatility. Ivan, there you go. You like this question.
I have no idea, honestly, how I know the VIX index is pretty good. The vol index on the XJO is a bit weird, in the sense that I think that so I get some background noise from my son. He's got an opinion about it. The thing that sorry, just so the thing about the vol is that our XJO IV is we've seen that being accurate. I don't know what's going on with that index over there. There's been days when volatility clearly spikes and it's dropped off. So yeah, not 100% sure as to how they're pricing it. But if you want to have a bit of a guide on implied volatility for the entire index, I'd be going to implied volatility into the platform and going and looking at the charting indicator on the bottom.
Yeah.
Because that is I guess probably just to add a little bit more, it is weighted based on the bid and offer at the money of sort of roughly around about the 45 days, weighted towards, close a little bit towards 30, so it'll take usually 2 strikes.
Yeah. And obviously that you're then looking at it per stock as well as on the exchange.
Yeah, that's the big benefit.
Massive benefit.
And also, yeah.
When you're in when you're putting together your option strategy as well, you can look at your volatility there, and you'll notice as strikes go in and out of the money and further out in time that volatility number changes as well. And if you watch it and you're looking at your theoretical pricing, it starts to tell you a story of what's going on, and it gives you a better feel for what's impacting your options positions. All right, so we've got a question here. Hi guys, I'm new to options trading. I was wondering if you can explain about time decay. You mentioned that you didn't want to hold options to maturity. I was wondering if you can explain the time value change. Okay. The best way...
I was just going to say, I think there's an actual, in the education portal in the top right-hand corner, you get access to this, so maybe just sign up for a trial if you haven't already, and get us to give you access to the 10 by 10. There's a whole video talking about what time decay is and going into detail on it. It's more than sort of a 5-minute answer in detail. I think you'll probably give it a quick 2-second version, by the way, Patrick, but I was just going to say 10 by 10 video and the education course is the best way to get access to that, Hader. And do you want to give it the 2-second explanation, Pat?
The simplest way, well, if you I guess a way of thinking about it would be, say, for example, I was buying an insurance policy and it was going to get covered for 12 months. I'd pay for 12-month coverage. If I was getting covered for 6 months, I'd pay, half the amount or something like that. So this is a very simplistic comment on why the value changes, because you're paying for, the eventuation of something occurring. But the simplest way to think about time decay is to not worry about any of that stuff and just actually look at payoff diagrams and understand how payoff diagrams work. So you can become an expert on every option strategy on the planet really, really quickly by ignoring what's in the options contracts and what's priced up there, and fiddling and getting too worried about all the different information there, and really just moving straight to the payoff diagram and saying, okay, if the price goes up, what happens to the value of my options position? And if that happens, in 2 weeks' time, what's the impact on time? So I can see, on the 1st of Feb, what's that, 16, 17 days from now, this position's lost $1,000 worth of time value, right, all the way through to expiry on the 20th, where it's lost 3,500, and you can see that the period of 19 days, so they're equal periods, but I've lost on the first period, I've lost 1,000. In the second period, I've lost 2,500. So there's an acceleration in time decay there. But you can plot in different option strategies that really show you on those payoff diagrams the impact of time decay. Okay, any other questions that we can help with? All right. Well, look, we've covered a little bit of territory today. I think it's an interesting time. I'm really, for me, the trade that I'll look at is probably that straddle tomorrow. Hopefully I can get the pricing I want on vol. Might be the following day, or I might miss it if a move occurs. But that's the sort of thing I'll be looking at, is trading off the pivot at the moment. So it's lining up nicely. And I'd be really happy to do that trade. I'm pretty fussy on pricing. And if you're in the trade group, I'll talk about whether I'm in or I'm out at that point in time. It'll be interesting to see. I'll be watching that strip trade. I get where you're coming from on that side, Ivan. I think that's an interesting one as well. The breakout trade, we're close, but it's just not quite lining up at the moment. I do agree with what Ivan's saying on the bigger companies not being there for the run. That doesn't mean they can't run, but they're not there, and they haven't broken out as well. So it's an interesting period. Anything to add there, Ivan?
Yeah, I was just going to agree with you, just in terms of the slightly better vol. Be good if it was under 10. Be good if we sort of got an extra 20 points or so out of this tomorrow, close to 7,000. The better the better the closer to 7,000, the better it would be. So I think we're probably watching the same levels over the next 2 days.
Absolutely. Now, Martin has asked, I have the demo. Will I be able to attend the trade group? Yes, you will. Right. So it's on Thursday. If you don't have access already, Tim will be able to get you set up with access. Just send us an email. But you should have been booked in already, so you should be getting a notification on Thursday that session's happening. It's 12 o'clock Thursday Eastern Standard Time. If you're somebody that wants the help of a broker, we have a team of brokers that work with us, so they're options experts. They are, so this is our Reach Premium team, and they understand our technology, or they're part of what we do, and they are qualified, experienced options traders. Geez, they trade a lot. I have to approve all their trades, and I have to approve 20 in about 5 minutes.
They smashed the next year today.
But they are very experienced, and so if you want someone that can hold your hand, Tim, who runs the trading support, you can call him up. He can teach you how to use the platform. There's videos to explain things. You can follow our trade ideas. You can call up and speak to Tim about that. But if you want an advisor who can put the trade on for you or come to you with different ideas and so forth, type in advisor and we'll organise for one of the advisors to give you a call and introduce themselves. There's absolutely no, if you're comfortable and you want to continue, you can go from there. But we want to give you the best of both worlds. If you want to do a trade with us, you can do a multi-legged trade. It's $24.95 per leg. It means you could do an iron condor or four-legged trade with a smaller amount of capital than has previously been possible. And you can do it yourself online and get the best discount rates available in Australia. Or if you want to speak to someone and put the trade on, you can speak to a really experienced options trader and they can help you get the best feel. If you're out on the road and you're not in a position to trade online, they can help you through all of those things. So you've got both, right? And I think what we've always had a problem with is you're either paying the premium rates, not necessarily always dealing with an expert, but if you want to do something online, you can't, right? So I just want to close out of an iron condor. There's nothing complex. I just want to press the button and say close trade. Well, you can do that with us and pay the lowest brokerage prices available in Australia. If you're getting advice and you want the support and the advice, well, you speak to someone that's qualified and you get that. So we give you both. It's up to you how you want to use it. We really don't mind. And obviously, if you're going to trade, you want the best technology behind you and you want what that technology can do and the data that it can process and so forth. So, that's what we're about. If you would like any of those things, type in yes if you haven't already requested the trial. We'll get you set up. If you'd like to speak to an advisor, type in advisor. If any of you that use the platform at the moment haven't already, just put that in. We can get someone in contact. All right, guys, any final questions? Thank you for taking the time to get along tonight. I hope you've learned something. If you want to come along to the trade group, for all those that we know, a lot of people online tonight, we will see you at the trade group on Thursday. I look forward to picking the conversation up then. Ivan, anything you want to add?
You just know that I love saying the final word. No, all good. Thank you so much. Thanks everyone for attending.
All right, guys. Wonderful. Have a wonderful night. Thank you very much. Cheers. Bye-bye.